Well, let's talk about gold, silver, and Bitcoin. You know, this deflationary spike event is setting up. They're going to come back more toward the dollar. It's all in part of the setup into the deflationary spike event that's occurring. Now, what's going to happen is this is almost like what you'd call a margin call. It's the system is over-leveraged, and this is going to be a deleveraging event. Now, the Federal Reserve and the other central banks are setting this event in motion. They can't help but set this event in motion. They're caught in a trap. It's the money that was caught in a liquidity trap has been bleeding out. That's what's been supporting the system. But when that starts to get to a point where the money there's no excess liquidity floating around in the system anymore, we're going to see a stock market correction. When it happens, it's gonna snap. It's gonna happen. We're already seeing interest rates going to be climbing pretty soon. Let me just take a look quick at the bond market. I was watching it this morning. Bond prices are climbing. Let me take a look specifically at the 10-year. The 10-year is the one I'm the most interested in. It's not up significantly in the day, but it's going to creep up with the Fed selling bonds with no buyers. I mean, this is going to have to creep upwards. I mean, let's just face it. There's nobody out there to buy bonds, and so it's at 2.278. I can see it going up to 3% on the U.S. 10-year pretty soon, in the not too distant future. And at the same time, I can see them raising interest rates again before the end of the year, and possibly again next year, early in the year sometime, maybe in the spring. 2 more interest rate hikes. And otherwise, they're going to get a flattening yield curve. This whole thing is leading someplace, with them trying to sell their asset book, $4.5 trillion. I believe they're going to sell $10 billion a month, or try to sell $10 billion a month into no buyers. I mean, they're knocking the legs out from underneath the table. They've got 3 legs knocked out now. The table's wobbling on its last leg, and they're going to kick its last leg out from underneath it and bring it down. Now, about silver. I can see the silver price not going that much lower. And the reason why is these guys who are manipulating the silver price, they know full well that they have to be careful at a certain point, because if they go below the price of mining cost production, the mines will start closing up, and they really will have an honest-to-gosh silver shortage if they go too low in the price. Right now, the mining cost, all-in cost of production to mine silver is probably somewhere around 12, 14, somewhere along in there, U.S. dollars. And today the silver price is at $16.90. This is not leaving a huge margin. I mean, we're only talking about maybe a $2 margin, or a $2.50 margin for most miners. You take that margin away, that profit margin away, and they're going to have to start shutting machinery down, shutting down sections of their mine. And what would happen is the amount of silver that they produce would markedly drop off. And of course, what would happen then is you'd have an honest-to-gosh silver shortage, because as the price drops, demand would increase as well from investors, especially if there's trouble going on in the market, such as a market crash or something like that. And so what it could all lead to, if they drop the price too low, is the price going up astronomically high. They don't want that. They want to try to keep it at these levels, like between say $14 and $17. They're trying to keep silver and they're trying to keep gold in between $1,100 and say $1,350. They're trying to keep these prices range bound is what they're trying to do as they keep the system kicking the can down the road. This is what they're trying to do. So they're going to keep gold and silver roughly stable. So if you buy into gold and silver, you're going to find a reasonable amount of price stability, whereas an awful lot of other places where you put your money, you don't find any price stability at all. I mean, the markets are so crazy right now that it could go down massive amounts, like the stock market right now and the bond market. And where do you put your money right now? You put it in, if you're an investor. The thing is probably your safest place is gold and silver to put your money right now. Even though for the next little while, don't expect to make much profit until they flip the system, until the velocity of money goes up. As long as the velocity of money is staying down and is suppressed like it is now, and we're in a deflation, and the deflation is a certain amount of deflation in the system that's being fought off. As long as that's the case, expect them to keep these metals range bound. They're going to keep these metals range bound in a certain price range. But it's still a stable buy. It's still a stable place to put your money, even though you won't make a lot of money in the short term. What I'm talking about is until the deflationary event plays itself out, and they come to the rescue and they cure the deflationary event, which is going to be something like 2008, except worse. When they cure that event, that's when the velocity of money is going to shoot upwards. And that's when you're going to really see gold and silver shine, price-wise. But until then, it's going to be basically range-bound. Now, Bitcoin, during that same period in time, I think is going to suffer worse than gold and silver. From the prices it is now. And so I would say even now at these prices it's very risky putting your money into Bitcoin. I tend to think, I tend to think that we're going to see it drop down into the 2000s in not too far distant future is what I'm tending to think myself. Now I suggested that people start buying in price averaging. And so I price averaged. I bought some at 38. I'm planning on buying again probably somewhere around maybe the low 30s, maybe. I might buy a little bit more, and then I might buy a little bit more in the high 20s, and I might buy a little bit more in the mid 20s, mid 2000s, I mean, and then when it gets down to the low 2000s, buy a little bit more. Price averaging all the way through with Bitcoin. I can't see it going down, just like gold and silver. I can't see silver going below, say, 12. I can't see Bitcoin going below maybe 1,200 or 1,400, something like that. There's a base price, when you get down to the cost of mining. It costs a certain amount to mine a Bitcoin. It costs like $1,000 worth of electricity to mine a Bitcoin. So it's not going to go below that price or the miners would all turn off. And that ain't going to happen. It ain't going to happen. So you're going to see the mining and everything continue to keep going with Bitcoin, but you're going to see the price go down, and you're probably going to see Bitcoin make a triple bottom. That's what you're probably going to see. It's probably going to go down once to a bottom and make a bottom. And then it's going to go down and test the bottom again, maybe a month later. And then it'll go along and it'll test the bottom again. And then when this deflationary event occurs, both gold, silver, Bitcoin, and all the cryptocurrencies are going to go unbelievably. They're going to go, everything's going to go berserk. What's going to go down then is the dollar. But until this deflationary spike event occurs, Bitcoin, gold, silver, it's all going to suffer. As long as the Fed is tightening, Bitcoin, gold, silver, it's all going to suffer. You got to wait until the Fed reverses course. As long as they're in this tightening mood and they're continuing to raise interest rates and try to sell their balance sheet and all this stuff, they're going to bring the economy down. That's what they're going to do. until they bring the economy down, until they reverse direction, gold, silver, Bitcoin, it's all going to suffer. It's all going to suffer in price. But if you buy in at the right prices, you can buy in and get a reasonable amount of stability on your money anyway, especially with silver. Getting a reasonable stability. I mean, what I'm saying by that is if you invest in silver, the amount it can go down is not that far. It might go down a couple dollars, but how much is the stock market going to go down? If silver goes down a couple dollars, how much are they going to lose in the stock market? You're going to lose 10 times more in the stock market. So where do you put your money? You got to put it someplace. You know, you can't leave your money in the bank. That's the most foolish step of them all, because if you understand how the banks actually work, all of the bank's credit, the credit that they count when they do these stress tests in the United States, the credits that they're counting in the bank is money that's lent out. When somebody borrows money out of the bank creates that money out of thin air. It's called fractional reserve banking. But once they create that money, the bank cannot get rid of that money. It goes on their balance sheet, and then if that person doesn't pay them back, then that's left as a debt to the bank, and the bank cannot create the money to cover that debt. It suddenly becomes a liability to the bank. Well, it's a credit to the bank as long as the person's paying them back. But as soon as the person doesn't pay them back, then it becomes what's called a non-performing loan. And this is what's saddling all the banks over there in Italy right now. 300 billion euros worth of non-performing loans. And this is taking the banks in Europe down. Let's talk about Greece for 1 minute. Just 1 minute, I'm going to talk about Greece. Greece owes the European Union like 300 billion euros. Something astronomical like that. And what happened was a little while ago, Greece actually has them where they want them. You would think that the creditors, the ones who lent the money to Greece, would have control. Actually, they don't. Greece has the control. And the reason why Greece has control is because if Greece throws their hands up in the air and says, hey, you know, we're not going to pay back any of that money we owe you, then that's such a big amount of money that the creditors couldn't make up for all of that. It would create such a black hole of money that they would all go bankrupt themselves. So in order for them to stay alive, they have to actually say, okay, here, Greece, we're going to lend you $10 billion. Here's the loan. They write out the loan. This is when they give it to Greece, and then they say, okay, now Greece, you make your payment back this month, your scheduled payment on your loan that you owe us over the years. You know, go ahead, give us that $10 billion back. Now that's your payment on your loan. I mean, this is kind of a ridiculous kind of situation. I mean, if you had a guy that was renting your house from you and he owed you $2 million, you know, and he said, listen, he said, I'm never going to pay you that $2 million back. The only way I'm going to pay you that $2 million back if you lend me $100,000 more dollars. But don't worry, you lend me the $100,000 and I'll give you the $100,000 back, and then we'll pretend like I just made a payment on what I owe you. I mean, the whole thing is just absolutely ridiculous, but it's keeping the system alive. Because if Greece didn't make their loan payments back, the whole system will go down. So Greece has to make their loan payments back, so they give Greece the money to make the loan payments back. The whole thing's a racket. But they can only keep this racket going so much longer. The whole system's going to cascade down, and this is what this spike event is. The spike event is not the whole system actually cascading down. It's the system starting to break apart to cascade down, and they're going to rush in with a band-aid, which is going to be money. Vast, and it's not going to take a little bit of money either. It's going to take absolutely vast oceans of money that they're going to have to dump in to try to stop this. This is going to be something like 2008, very similar, except much larger. And so the amount of money that it's going to take to actually stop it and bring it to a halt, it's going to take an awful lot more money. And this is what's going to bring on the change in the velocity of money, because when they print all that more money and that money hits the system, then we're going to see a reversal in everything. We're going to see a reversal in the depressed economy that we've been undergoing for the last little while. You see, I'll explain it to you this way. Those hurricanes we just had down there cost billions and billions of dollars. What effect do you think they're going to have on the economy? All that huge amount of destruction. Isn't that going to have a terrible effect on the economy? Actually, no. It's quite the opposite. It's actually going to help the economy over the next couple months. People are going to have to buy new cars because of the cars that get flooded. People are going to have to build new parts on their house because of the insurance that's going to have to pay off. And then they're going to be in the store buying new studs. And they're going to be hiring people in to putting up new gyprock and stuff like this. And it's going to be a boon to the economy. That's what it's actually going to be. So if we had 100 more hurricanes hit, maybe the United States could actually come out of this depression that we've been in for the last so many years. All we need is 100 more stupid hurricanes to hit. You know? And this is the kind of world we live in now, where good news is bad news, and bad news is good news. This is why the stock market actually goes up on bad news. You know? And the stock market actually goes down on good news. This is why. This is the reason why. So anyway, we're living in a topsy-turvy world, and where in the heck do you put your money? Well, you want to stuff it someplace where you know it's safe. And the banks, leaving your money in the banks now is not going to be safe, because when this deflationary spike event hits, it's going to hit with such ferocious speed. It's going to hit so fast, and when they react to it, they're going to react to it so fast. And if you think, oh, you know, I can rush into the bank and I can get my money out of there in time, think again, because you'll run into the bank that morning when the event's occurring, and you're gonna pull on the door, you know, the glass door in front of the bank, and it's gonna make that clunk 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 sound. And you're gonna say, what? It's 10:30 in the morning. This bank should be open. 10:30 a.m. It's supposed to open at 10 a.m. It's 10:30 a.m. You pound on the door. I mean, the lights are going to be out in there. There's going to be nobody in there. And you go clunk on the door again. You know the sound it makes when the lock's locked on the door. And you're going to be like, why is this bank closed? And you're going to run home. And you're going to hear in the news why the bank's closed. All the banks are closed. That's what it's going to be. And you're not going to be able to get your money. Simple as that. They're going to have your money, and you're not going to be able to get your money. At a certain point, they will give you your money back, when it's only worth 30% of what it's worth right now. Then they'll open up the bank door and say, come on in and have your money. And believe me, when they open up the bank door at that point and say, come on in and have your money, the hyperinflation is going to already be on. You better get out there and try, at that point, to buy some gold or silver, physical gold or silver. But you're not going to get it at these prices we got it at right now. If you can get any, you'll go into your store and you'll have to, if they got any left, you'll have to take something that you might not have taken as your first pick. You might have to buy some of these numismatic coins and stuff that are way overpriced, you know, and you might have to pay double to get them, and you'll be glad to get them, and you'll only be able to get very limited quantities. I mean, it's just going to be ridiculous. And you'll be glad, though, to be able to get them. And you'll have to be first in line to get them. You might have to wait in a line for 4 hours to get the dregs of what's left, if you can get any at all. You know, this is what we're headed toward. And so why not, right now, well, gold and silver are dirt cheap. Really, they are, considering the almost at mining production cost. I mean, we're just maybe $2 above mining production cost. Seriously. And this is the time, man, to put 5 to 10% of your portfolio into the stuff. This is the time. You know? Now, I'm going to talk a little bit. I've talked about gold and silver, and I've talked about Bitcoin. I'm going to talk a little bit about dogs and cats. You know? This afternoon, my cat and my dog, I was hooking up a new computer, and this is why I'm kind of late getting my video on today, you know. I was hooking up a new computer, and I was, the shelf where I keep the computer on stuff, I had some all kinds of, you know how junk accumulates on shelves, you know, so I was trying to shuttle the computer around, get it in the right spot. I pulled it ahead to hook a wire on the back of it, and a bunch of junk fell off the shelf and fell on the floor. Well, the dog was there, you know, and this stuff fell down right next to him, and it spooked him. And he jumped backwards, and the cat was behind him. Wouldn't you know, he bit her. He spun right around and bit her. Well, she wasn't going to take that, I want to tell you. You know, she wasn't going to take that lying down, and she just jumped on him, and I'm going to tell you, the two of them were rolling around the floor, and I heard yelping, and I heard hissing, and I heard spitting, and I couldn't separate them. I mean, they were going at it, the two of them, like they're full of adrenaline, you know. So I finally got them separated, and sent one to one corner. You stay in that corner, and the other one, you stay over there in that corner. And she was over there, and she was still going. She's even hissing at me because she was so excited and so mad, you know. But what had happened, she was so full of adrenaline, you know. So I had to take time, and I had to send her upstairs, and then I had to check him all over. To make sure he wasn't any hurt, didn't have any real damage done to him, you know, and check his eyes, and had to check everything and make sure he was okay. And then I had to get her down, and then I had to go all over her and make sure she wasn't wounded or anything wrong with her. The two of them seemed to come out from it pretty good, you know. They didn't really hurt each other too much because they're both about the same size. But boy, I'll tell you, they sure are, these animals, you know, sure are full of adrenaline, you know. They got a lot of adrenaline. What they remind me of these people, you know, that are like drivers, you know, that have road rage. And the least little honk at them. I remember one time about maybe, I don't know, 10 years ago or something, you know. This guy pulled out in front of me. He had a van, you know, and he pulled out in front of me. And I think I had a van too, you know. And this was back, you know, when they used to have VCR tapes you could rent and stuff. It must have been 15 years ago, maybe 15 years ago. Anyway, I was on my way down to a store to rent a few VCR tapes, you know, to watch some movies. This is back in the days when you used to rent movies, you know, like Blockbuster type store, you know, where you go to rent the movies. And you take them back a couple days later. So anyway, he pulled out in front of me, this guy. And I give him a little toot with my horn, like, because he pulled right out in front of me. And he pulled in behind me at the traffic light. And he was behind me there. And he was like waving his fists around, right? So I went through that traffic light and went around the corner, you know. And I went to the video store and I pulled into the parking lot. The son of a gun followed me into the store, you know. And I got out of the car and I walked into the video store in there, and he followed me inside the store, and he was going to pick a fight with me. He's screaming and yelling and everything else. What a nut. What a loony. You know? And this is what, he was a road rager is what he was, you know? And actually, I'll tell you the truth, I've had two situations like that happen since I've been driving. I've been driving a long time. I've never had any accidents or anything the whole time I've been driving, but I've ran across two road ragers. They're like that little dog, you know. They're right full of adrenaline. They're right quick to jump and bite and everything else, and or maybe not bite, but yeah, bite. They could bite, yeah, you know. But they're behind the wheel, and you know, a car is quite a dangerous weapon. I mean. People, you get a crazy guy like that, and once he's lost all sense of normalcy, and he's off in a complete rage, he's completely lost it. There's no telling what he might do when he's in a total rage like that. I mean, this is they're just like that little dog. Normally, my dog and my cat are pretty good friends, you know. But when the two of them get in a rage like that, I mean, all bets are off, you know. They're right out for blood, you know, even though normally they're friends, you know. But that's the animalistic instinct. So I suppose some of these road ragers have that animalistic type of instinct in them, you know. And it's not so much, what would I call it, when a person is intellectual. It's more animalistic, you know, sort of a deal. Anyway, I've probably talked enough about Bitcoin and silver today. Bitcoin, I think, is going to tumble along, you know, and slowly drop in price a little bit as the deflationary comes in. The dollar, I'm expecting the dollar to slowly hold its own, if not climb a little bit higher during the deflation that the Federal Reserve is creating. I think they're going to win in the end. They're trying to create deflation, the Federal Reserve. They think that they're trying to create inflation, but if they're knocking the moorings out from underneath the financial system, they're going to create deflation. And sooner or later, the stock market's going to react violently when it finally does react, you know. Anyway, so thank you guys for listening, like, and subscribe, and we'll catch you in the next video. Bye.